You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was and indeed still is from a vol trading and trending and analysis and unusual activity and all sorts of perspectives. And you know what? This is normally the portion of the show where I would be joined by our crazy special guest, Mr. Once in Future Dr. Vix, Mr. Russell Rhodes. Looks like we're having some technical difficulties getting Mr. Rhodes here on the program. We will keep working through that, see if we could fight the good fight here to get him on, listeners. Nonetheless, you guys know where to listen. Of course, you're listening after the fact on demand. You want to keep those reviews coming so all the folks out there can continue to discover these shows. So if you like what you're hearing, keep rating and reviewing. It really does help all the new folks out there discover the program, ever more important these days. And then, of course, if you want to listen to it live, you know where to go. It is theoptionsinsider.com/pro. That's where you go to learn more. You get to sign up for all the cool stuff. In fact, TWIFO listeners, you guys missed a great pro Q&A session this week with Mr. Nick Howard. Yes, the guy who actually created all of the cool tools that we use on TWIFO every week. He's the creator of Quick Strike, so we got to answer all of your questions about everything in the world of futures options. So by all means, listeners, if you missed that one, you missed out on a good one out there. Let's see if we can get Mr. Rhodes going. Meanwhile, though, let's kick it off as we like to do with our movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report. Like I said, I'm just struggling to get the once and future Dr. Bix. He is on vacation, which makes him a little bit more difficult to reach. Let's see if the third or the fifth time is perhaps the charm out there. There we go. All right, let's see if that will bring him on to ye old program. Oh, let's see. Mr. RHOADS, are you there, sir?
I'm here.
All right.
I heard a bunch of background noise. Can you hear me?
Yeah, we can hear you now. So there we go. We can hear you.
Okay.
All right. Mr. RHOADS, welcome back to TWIFO, sir. Where are you vacationing on God's green earth, sir?
I am in the Redneck Riviera, which is the basically the North Florida coast on the Gulf of Mexico.
Oh, I just came back from the Floridas as well. I came back from the hot zone of the Delta variant known as Orlando, sir.
Oh, wow. So did you bring anything back with you?
Hopefully nothing bad. We'll see.
Okay.
I feel great so far. We'll see.
Right.
We'll see if that holds up. But we are, sir. I just kicked off the Movers and Shakers report, so you know what's going to come next, sir. Where should we begin our delicate dance through the world of futures options this week? To the light side or to the dark side?
Oh, let's go to the light side, because I was pretty excited when I saw the light side list.
Yeah, there's actually some stuff to be found. It's actually a weird week, listeners, where there is more red than green on the old report, roughly 2/3 to 1/3 red to green. By the way, if you want to see the report for yourselves, we tweeted out also the folks over there at CME tweeted out before the show as well. So give them a follow at CME Group on the old Twitters if you want to see this report for yourself. It's one of the few reports you can't generate from the free TWIFO report over there at cmegroup.com/TWIFO. If you were to generate such a report, you would see the following in the top 5 here. We've got some ags hitting the top 5. Wheat up 1.63%, followed by number 4, KC Wheat up 2.59%. Then we've got Nat Gas, number 3, 2.61% to the upside, followed by numero dos, Lean Hogs, up 2.82%. And number 1 is Palladium, up 7.03%. Before you ask, hey, can you break down Palladium this week? I checked right before showtime. There are a whopping 0 contracts on the tape this week, so kind of hard to parse that one from an overall options perspective. All right, let's move on out now to the dark side. Got more metals on the dark side as well. More P name metals out there, in particular platinum. Number 5 to the dark side, off 5.12%. Same question before you ask there. A whopping 143 contracts going up this week in good old platinum. Number 4, soybean oil, off almost 6.5% this week, listeners. We know some paper goes up there, so we can hang out there. Number 3, WTI. WTI back on our Movers and Shakers report. It's been a while since we've hung our hat out there in WTI. Maybe we could check that one out this week. Off 6.76%. And yeah, doing some paper, 458,000 contracts, followed by superseded by number 2 here, at least from a movement perspective, not from a volume perspective. Number 2 is Brent. You don't see Brent on this list too often. I should say off 6.75%, actually 6.77%. So just outpacing WTI by a 100% to the dark side. Before you ask, only 2,600 contracts going up over there in Brent. So Brent, not the big dog over there at CME. All the action is really in WTI. And number 1 to the dark side this week, listeners, lumber off 14.71%. Again, same deal before you ask. A whopping 69 contracts on the tape here for lumber. Before we keep rolling into the show, Mr. RHOADS, the numbers are in from our friends over there at CME for July. We just broke down the numbers for the overall equity options industry on the option block, listeners, for July. And spoiler alert, it was a good month. July, the highest, most active July in the history of the business. Well, let's see how the CME numbers fared over here. And same deal. The highest ever July in history for CME. So July, a banger of a month, no matter where you're looking across the board here in the land of options. Look at some highlights here from the CME numbers here. Let's see. Overall volume up 25% in July. Interest rate monthly ADV up 96%. Options ADV, overall total options ADV up 55%. And total energy, so futures and options ADV, up 23% in July. Let's see, a couple other highlights here. The highest ever year-over-year monthly ADV growth since March of 2020. And we all know what happened in March of last year. Interest rate monthly ADV up 96%. The ultra 10-year U.S. note futures up 125%. Interesting. Eurodollar, and that's already a big complex. Eurodollar futures and options up 121% and 119% respectively. Let's see. Treasury futures and options up 88%. Overall options, we already mentioned that, up 55%. Copper options ADV up 235%. That's an interesting story. We kind of mentioned that a little bit with Eric Norland when he was on the show from CME Research. Copper used to kind of be an also-ran when it came to options. Not so much anymore. It's getting up there. What else we have? Ag options up 120%. Energy ADV 23%, including 44% growth in the options. Obviously, the newest edition, micro WTI futures, they hit an ADV of 43,000 contracts, having traded more than 645,000 total contracts since launching back on July 12th. WTI futures up 37%, options up 81%. A lot of you discovering WTI options out there. Nat Gas 16%. Micro Bitcoin futures hit an ADV of 17.6 thousand, hitting more than 1.4 million total contracts since their May 3 launch. Micro E-mini futures and options represent 37.6% of overall equity index ADV now. So the micros are where the action is. Micro Bitcoin futures, by comparison, only 0.4% of overall index ADV. So interesting stuff, Mr. Once and Future Dr. Vix. Any surprises for you there in those numbers, sir?
I'm surprised at copper, because I felt like copper which is a great inflation hedge, that trade had kind of played itself out when people were a lot more concerned about a potential spike in inflation. Of course, that could all be put activity, and I could just be putting my foot in my mouth right now. But that's the one that really stands out to me. The ultra 10-year, I just wonder if there's so little volatility in the old school 10-year futures that people are looking for something that gives them a little bit more volatility to trade around in, and that's what's been contributing to that volume. And then I like to see SOFR kicking in, because we need that LIBOR replacement. We need a liquid LIBOR replacement ecosystem, and I think SOFR is most definitely going to be that.
Yes, interesting stuff afoot here, sir. So we have a lot of places we could potentially begin our journey this week. What is catching your eye, sir?
Let's do energy. I just like to throw you a curveball sometimes.
Yeah, usually you say rates regardless of what's going on. No. Unfortunately, no rates on either of the movers or shakers this week, sir. So you can't really say rates. Instead, you're right. I think it is a good time. In fact, look at this. I already have WTI pulled up on my screen. It's like I knew what you were going to say or something, because it's funny. For a long time, WTI was a staple on this show. You really couldn't escape it week after week, and it's been a while since we've really done a deep dive into WTI. So let's do that.
It's time to tap into the deep options well of black gold, Texas tea, Nat Gas, and more. It's time to talk energy.
Listeners, you know where to go to get these reports and all the other good stuff. CMEgroup.com/TWIFO, TWIFO is the place to go. /TWIO should also work, TWIO. Remember, keep those in lowercase for whatever reason. Case-sensitive URLs. They don't like the caps. All right. Go to that drop down. Go to energy, then go to WTI. You can check out Brent if you want. You'll see there's only 2,600 contracts there, so not a lot to parse. Instead, let's head out to WTI, which, as we just saw, is pretty active. Speaking of which, let me hit this really quickly. I also have some interesting numbers on WTI weeklies, which is, again, that's almost been a theme of this show since launch. In fact, going back to the predecessor of this show, which was the long and short of futures options. This is the question I've kind of put to almost everybody over there at CME over the years. The researchers, the folks on the energy complex, Derek, who runs the overall options. It seemed like, for whatever reason, the listed weeklies, nobody wanted to touch them in WTI. Now, when a standard monthly contract would erode down to a weekly, then they would trade it up. That would trade no problem. But when you had a listed weekly around that monthly, it would be anemic. It would do a few hundred contracts here or there. That was it. And I never really could understand why that was. And we talked to a lot of people about it. We had a lot of different suggestions. I think it ended up coming down to probably some system issues with how these were displayed versus the traditional monthlies on a lot of the brokerage. People just couldn't find them. But for whatever reason, it seems like that may be improving. You see me putting out here weekly options on WTI are starting to hit some records. Since the beginning of July, crude weekly options ADV has been over 5,000 contracts a day, considering they haven't really not done much at all. That's actually a lot. More than double the year-to-date ADV and the highest since March of 2020. Again, going back to March of 2020, that was a no small month. Average daily OI of crude weeklies since the beginning of July 2021 has been 11,040, 50% higher than the year-to-date average OI. Average number of daily users trading crude weeklies has increased 67% just over the past 4 weeks. So this is a recent phenomenon. And since going live on June 28th, 103 different quarter strikes have traded across all the listed weeklies. So interesting stuff. You know, Mr. RHOADS, this is something you and I have talked about in the past, the weird reluctance to trade a weekly in crude. Do these numbers surprise you? And you think maybe that reluctance is finally coming to an end? So we're going to see maybe not quite the volume we're seeing in equities, but a little bit more uptake in the weeklies in crude, sir.
I think more and more you're seeing people look around for different opportunities for really, really short-term option trades. You know, options that have 2 or 3 days left to expiration, they often seem to be a bit overpriced. And there have always been these strategies that we did way back in the day when we had once a month expiration. And I just think that more and more you're seeing those things, work their way into different areas. And if equities aren't doing a whole lot for you as far as the implied volatility that you're going to get when you're going to try to take advantage of overpricing, you start looking around at other areas that have weeklies, and oil is kind of a fun area. So I'm not overly surprised, but I'm actually surprised it hadn't caught on more quickly. But I'm a huge weeklies fan.
And of course, we are coming in here. By the way, go to that drop down, go to WTI. You'll see coming into Showtime, almost at a 69 even in WTI, off nearly 5 handles or 6.61% on the week. You chose energy first, Mr. RHOADS. So before I dive into a breakdown of what's lighting it up out here this week, what's lighting up your tape out there in the land of energy and crude, sir?
As far as I'm kind of surprised to see crude broke that 70 level. I know it's been hovering around higher levels for some time. And I don't know. I would expect it to, if it broke 70, to be in the lower 60s, not the upper 60s, or continuing its march higher. But the no man's land that it's in right now is a little bit surprising to me.
Let's break down that no man's land and see what we find. Looks like over 500,000 now, 516,000 contracts on the tape. So a lot trading today out there in WTI as well. Of that roughly 500,000 contracts, about 41.5% going up in the SEP contract that has 12 days to go. So this kind of reinforces what I was just talking about. This is a standard monthly contract, but it is starting to erode down into the weeklies. And so we have what is effectively a weekly with 12 days to go, and people are trading it. 41.5% of the paper going up out here. So let's hang our hat out there. It's within our 2-week frame of reference, but we'll make an exception for 2 days here. Let's see. The vol out here ticking up, getting juicy. 35 and about a half coming into Showtime. That's up 7.7 points from this time last week. So everyone out there is saying, VIX 17 and a half. I don't want some more vol. Energy is looking at you saying, hey, I'm over here. Come play with me. Let's see. The skew here. Puts last week, 8.4% rich. This week, 13.5% rich. Those puts are getting juicy, getting bid up. Calls last week, 5.5% cheap. This week, 8.3% cheap. So kind of that narrative we've been talking about for a while. It seemed like maybe the paper was starting to fade, some upside in WTI. That certainly is the case this week. Of course, we had a pronounced sell-off as well, so that's going to add a little bit of kick to those puts as well. And in terms of where that kick was and where the action was this week, it was pretty much all 65 puts all the time. The most active contract in the SEP contract was a 65 puts with 14,256. Let's see how that broke down throughout the week here, listeners. The most active day was Tuesday at about 4,500. followed by 3,500 on Monday, 3,100 Wednesday, and about 3,100 again today. Looks like back and forth opening and closing throughout most of the week. So a lot of back and forth on the 65 put strike here in September. But not to be outdone, we also have the October 65 puts doing about exactly 12,000 contracts, 4,000 yesterday, 3,500 today, the rest scattered throughout the week. Most of that opening. So opening downside paper out there in October. A lot of 65 put love here across the board. Let's look at some other contracts here really quickly. Also had kind of a bit of a tie. There were some calls on the list as well. We got to actually, number 2 will be the 68 puts in September with about 13,000 going up this week. The lion's share yesterday, 6,400. The rest kind of scattered throughout the week. A good chunk of yesterday's paper was opening, maybe accounting for some of that. A little bit of a blip we're seeing in the put wing out there. Followed hot on its heels, 12,500 of the 75 calls. So there was some call paper trading this week. The most active days, actually a tie between today and Tuesday. Both days doing 3,800, 2,700 on Monday, 2,000 on Wednesday. Again, kind of back and forth with opening to closing throughout the week. So a lot of back and forth on the 75 call strike here. And then we go out to December. If that's not bullish enough for you, if that's not enough upside for you, 75 strike. Out in Dece, it was the 80 calls leading the dance with about 9,700, almost 10,000 of those going up. The big day was Tuesday, 4,000, followed by about 3,900 on Monday. Good chunk of those opening here. So 80 calls. Interesting stuff. Mr. Rhodes, any of that paper surprising you? Anything else lighting up your tape out there in the world of crude before maybe we take a quick segue into Nat Gas as well?
Well, I guess we just look at the crude option activity, and we know that for the next 3 months, we're not going to have higher energy prices, but something's going to happen toward the end of the year that's going to spike. We're going to end up with an 80 handle on crude, no question, because somebody's coming in and buying those calls. But what's also
that's exactly what that means, right? As we have to go there now.
Well, but beyond that, I'm kind of kidding about that one. But you look at the standard SEP November expirations, and you've all got a lot more. There's a lot more put activity than call activity. But then you flip when you get to December. There's almost twice. I think if I'm reading this right, almost twice as many calls as puts trading out with the December expiration. So, if you try to read activity into a prediction, it may very well be that's when people are concerned about much higher crude prices. So a little calm fall and scary end of the year. How's that?
Yeah, a little bit of a fading in the near term, gets your gamma to the downside, and then maybe a little bit of upside moving towards latter portion as well. As we keep on looking, before we roll out of energy, let's drop into Nat Gas as well. Nat Gas, number 3 on our light side movers and shakers this week, up 2.61%. Go to that same energy, drop down, go back out from WTI, go into Nat Gas. You'll see it's also a pretty active contract, pretty much going toe-to-toe with WTI for paper. 552,000 contracts on the tape right now, so a pretty active week for Nat Gas. Coming into showtime, we're seeing that front future at a 4.14. It's up nearly 6%, or about 0.23 from the start of this week. So had a nice move here this week. And of course, since our show last week, it's up about 2.61%. In terms of where the action was, it's that SEP contract. This contract has about 21 days to go. So a little bit different cycles here across the products. And that contract that has 21 days to go. Let's see the vol. If you're wondering, again, energy home to a little bit of juice these days, a 44.2. That's up 2.4 points from this time last week. So front month Nat Gas, a little bit of vol to be found out there. Let's see if the skew is also playing ball. Last week, the puts were 4.2% cheap. This week, 3.8% cheap. So the puts haven't really budged. The calls last week, 4.8% rich. This week, 4.5% rich. So not a lot of change. By the way, of all the paper, that over 500,000 contracts, 47% of it went up in this SEP contract. It's going up in 21 days. So a lot of paper going up here. And that skew's kind of unched. So not a lot of skew change here, despite the fact that the underlying is up nearly 6% from this time last week. Let's go out here to see what the most active contract. So we're at about a 4.14 in that front future. So might be forgiven for thinking maybe the 4, maybe 4.25 calls might be the order of the day. But no, you would be wrong. Not optimistic enough, listeners. It's the 4.5 calls leading the dance with 33,000 contracts going up this week. The most active day actually today, nearly 12,000 on the tape today, 9,000 Wednesday, almost 9,000 on Tuesday, 3,600 on Monday. A good chunk of that opening throughout the week. Obviously, we don't have today's OI numbers. Followed hot and heavy by the 4 3/4 calls, also very active throughout the week. 30,000 of those almost exactly going up this week. The most active day for them, Monday, 11,500, followed by about 11,000 again today. So maybe some 4.5, 4 3/4 verticals going up, and followed by 5,600 on Wednesday and about 2,200 on Tuesday. Again, a good chunk of that opening throughout the week here on the 4 3/4. So upside calls, the order of the day here in September in Nat Gas. Again, given this pop we've seen this week, it's kind of hard to fault those, even if those are, shall we say, surprisingly optimistic strikes. 4.5, 4 3/4. It's not saying it can't be done. I mean, look how much it moved this week, but still, it's going to take a few weeks like this to get us into those strike ranges where those are more relevant. All the way down at number 3 is a more, shall we say, close to at the money strike, the 4/4 calls, doing about 26,500 contracts this week. Again, the most active day this time actually was Wednesday, with about 10,000 going up Wednesday, 8,000 today, 5,700 on Tuesday, and about 3,000 on Monday. So call strip, call palooza, call it what you will here in September in Nat Gas, and perhaps not the strikes you might have assumed. Let's just look really quickly if we see any other aberrant paper. Yeah, let's go out to October. 20,000 almost exactly of the 5 even calls have traded out there. Most of those going up yesterday, 9,000 going up yesterday, and about a third of that was closing. So maybe some folks taking off some 5 calls, deciding those are perhaps a bit of a bridge too far, but another 6,000 trading today. So the 5 calls in October, surprisingly active out here. Let's see if we can find any other, shall we say, aberrant or optimistic prints before we toss it over to Once and Future Dr. Bix. You know, if the 5 strike, not enough for you, how's the 7 strike? Try that on for size, because the 7 calls traded about 7,000 times this week in December. 3,100 today, 3,000 yesterday, almost all of that opening. So opening size, far upside paper in Dees out here. That's really interesting. A 7 in Nat Gas, Mr. Dr. Vix. That would take a pretty, I think, substantial disruption to hit that. But what are your thoughts here on all this call paper, a call palooza in Nat Gas, sir?
I like how you tone it down and you keep using the word slightly over optimistic, because that's absolutely an understatement. It actually, I mean, whoops, that 5 strike in its own right sounds like it's a little out of control to me. I couldn't even fathom a 7 handle to end the year in natural gas. If you've got inflation doubters out there, Nat Gas, 3 points higher, 3 full points higher, that would definitely change your mind with respect to higher prices across the board. It's also kind of on the other side of everything. You had more calls than puts trading in the first 2 months, and then it kind of flips for the next 2 months. So there's plenty of put activity out there with the December contracts, even with somebody being very optimistic with respect to buying the 7 calls. I hope they sold something else to help pay for those, because I can see those going out with no value.
I could see that as well. And since you are joining us today, Mr. Once and Future Dr. Vix, I think we are legally obligated to talk a little bit of volatility. So let's head out into equities next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, let's do it. Let's head on out to equities. You know where to go. Go to that drop down, pop it out of energy, go to equity indexes, and then pick your poison. We're going to hang out in Russell 2000 here, but you could look at whatever floats your boat out here. Listeners, we don't judge. These reports run 24/7, 365. So you could check, NASDAQ options at 2 a.m. on a Sunday if that's really what floats your boat. We won't judge you here. Have at it. Enjoy. Have fun. We're going to kick things off in the land of volatility. And since, equities and volatility, kind of two sides of the same coin, let's dive into RVX first. RVX, obviously the VIX of the Russell 2000, a little bit shy of the 26 handle, still kind of hanging out in that mid-20s range. You know, the narrative for a while has been, can it get above 30 again, or will it drift below 20? So far, the answer to both of those is no. It's going to hang out here in the mid-20s at just about a little bit shy of a 26, up about exactly a point from this time last week. VIX cash come into showtime, flitting around between 17.25 and 17.5, about a 17.35, puts it down ever so slightly from last week, about 0.15, effectively unched from this time last week. So VIX cash hasn't done a lot of moving net on the week from last week either. VVIX, which is the vol of vol, at about a 113, so that's down slightly. We were hanging out at the 120 level earlier this week where there were some concerns about a sell-off. Right now, it's almost literally unched down a quarter of a point from this time last week. So VVIX also not really budging. And vol Q, a.k.a. the at-the-money vol of the NASDAQ 100, a.k.a. the newest tradable vol product over there at CME land, 16.25. That puts it down about a third of a point from last week. That puts that VIX to RVX spread, so that S&P 500 to small cap vol spread at about 8.5 points. It's actually ticking up a bit again. That's widening out about 1.25 points from last show. So a little bit of action as VIX has kind of hung out. We've seen RVX get a bit of an inhale, and that seems to be attributing to most of that widening. VIX to vol Q, so NASDAQ to S&P 500, that's a little bit wider than a point, about 1.1 points. That's about 0.2 of a point wider than last show. Not a huge change there. Mr. Rhodes, when you're not chatting with me, you're out there crunching all the numbers in the volatility landscape. What is catching your eye out there today, sir?
Well, first off, that RVX premium, I think it looks really expensive relative to VIX, with 8.5 points, but that number's been above 50% periodically throughout the year. So even though it looks expensive, I think we're right in line with where that has been. My big surprise over the course of July is, being an earnings month, we normally see vol Q take a little bit of a bump relative to VIX. And it didn't happen of course, I wrote something about it at the beginning of July, and then it didn't happen. So now I'm looking for excuses as to why it didn't happen. Well, none of the big NASDAQ components that reported toward the end of July had a big outlier move. Now, Amazon and PayPal had big drops, but not bigger drops than they hadn't seen in the last couple of years. And the rest of the big NASDAQ components that report on the July cycle, their moves off of earnings really did fall within the average range of higher or lower. And I would consider that a non-earnings surprise. So now I've got my friendly, helpful number cruncher from the Kelly School that's going to go back and see what did the top components of the NASDAQ do each quarter, and how is vol Q acting relative to VIX going into earnings season? Does vol Q do a good job of telling us that we might have some outlier moves or not? Because at least this one observation, vol Q was cheap going into earnings, and I was scratching my head. And then as earnings came out and some of those big stocks didn't do a whole lot, I realized that maybe it anticipates a quiet earnings season as well. But now I got to put pen to paper and prove that.
You have the number crunchers over at the Kelly School. I just have producers. So
I have a number cruncher to be named once I get down there. In fact, if anybody from the Kelly School that's an undergrad is listening right now, shoot me an email.
And you're dying to work for free for Mr. Rhodes. Yeah. Have at it.
No, I don't. I slip a little bit of tax-free cash under the table. So
tax-free cash, the best kind.
Yeah, or I'll Venmo. I'm hip. Hello youths. I have the Venmo.
The Venmo with the old Bitcoin, and Venmo a little BTC in their account, and they're good to go to do all sorts of number crunching. Let's crunch some numbers of our own, shall we? Go to that drop down, Russell 2000. Pretty active week out here for small caps out here. In fact, coming into showtime, we're seeing small caps net up about 0.25% on the week. 22.28 is where we find ourselves. So again, well north of the 2,000 level out there in small cap lands, up about 6.3 points on the week. So net, not a huge move on the week, but we're seeing some interesting developments out here. Decent paper on the tape here as well. People have been asking us for a while, Mr. Rhodes, what's going on with these kind of small delta calls in the Russell 2000. It's kind of played along with this crazy meme stock palooza we've seen of late, where everyone just can't get enough of upside calls in your AMDs and your GameStops, and now add Robinhood to the mix. Well, there's been a similar bit of fascination with upside in Russell 2000 for a while. So people always ask us, how are those trading this week? What's the most active contract? And the overall most active contract here, or I should say really part of the month, most active contract here from a volume perspective, about 35%, is in the week 3 August contract. So obviously with 1 day to go, that sounds like a weekly, right? 34% of the paper going up out there. So we can't really parse a 1 day to go contract. But of interest to us and interest to me really is to go out a little bit farther, go out to the SEP monthly contract that has 42 days to go. And that's where we find actually our biggest trade of the week. The 2,500 calls are lighting it up yet again this week, trading pretty actively. It looks like the big day was Monday. Looks like actually some of those closing, though. So maybe some folks were rolling back from the crazy, because those are smaller delta calls now, and some folks may be taking those off the board here on Monday. So the most active contract this week, Mr. Rhodes, still a small delta call, the 2,500 in SEP, but maybe someone deciding that was a bit of a bridge too far and taking it off, because it looks like they were closing it this week. Any other things of interest out there in the land of small caps for you this week, sir?
The net going out into October, you've got that's out into December. I'm sorry. Those 2450 calls trade 100 times. That's another kind of overly optimistic number to look at. You also typically for broad-based indexes, the put to call ratio is almost always above 1, which means more puts than calls are trading. With one exception, looking at the TWIFO page, the quick strike page, overall the put call ratio is 0.95, but only the looks like the weeklies that expire next week have a put call ratio above 1. So, part of what's holding RVX up, our friend Sean Smith, who says hi to everybody, would always point out that the call activity was one of the things that was driving RVX to the upside. That may be, it kind of faded out for a little while, but maybe that's coming back. And what's helping keep RVX up, because it's just unusual to see more call activity than put activity on a consistent basis, like we've seen in the Russell complex, whether it's the index options, the options on futures, or what this year. So something that's different than we've seen before.
Yeah,
it's different this time.
It's going to take something to keep RVX elevated, because that front contract that has a day to go, that's trading at about a 32. But obviously RVX is a VIX calculation, so it's more of a 30-day rolling number out there. If you get a little bit beyond that, you get into week 2, the vol is 22.5. Week 3, which did about 21% of the paper out here, that contract is about a 22.5 as well. Week 4 AUG contract at about, looks like about a 23. So all substantially lower than where RVX is right now. So barring some crazy, aberrant vol creeping back in there, it might be trending a little bit lower going forward in RVX here, which will be kind of interesting out here. By the way, let's break down some really quick skew action in vol. Week 3 contract had about 21% of the paper, so let's head out there. The vol there, about 22 1/3. So I said lower than RVX right now, which is kind of interesting, but still obviously structurally higher than VIX. So you're talking about 5 points higher. So if you still want a little bit of juice, you can do worse and look at small caps. Not a lot of change in the skew from last week to this week. Last week, puts were 12.8% bid. This week, same thing, 12.8%. Calls last week, 10.7%. Cheap this week, 10.2%. So the skew kind of hanging out there in the week 3 AUG contract. We'll see if that's the case next week as we keep on rolling. Mr. Rhodes, a lot of places we can go next. Where should we roll our TWIFO movable feast to next, sir?
Our movable feast, goodness gracious. I'm trying to think of anything but interest rates, but why do this interest rate stick in my mind like that? Why?
I don't know. They're not doing a lot of paper today or this week.
I know they're not, so let's do metals.
All right. Land of metals it is, sir.
Werewolves beware.
It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody. Welcome to the metals. This is indeed the portion of the show where we break down all that juicy vol out there in the metals complex. I'm joking, of course. Not a ton of vol out there in the metals land. If you want to go find this for yourselves, back out of that drop down, back out of equities, head on over into metals. Let's hang out in the precious metals. We could go base as well if we were so inclined. By the way, platinum, unfortunately, only 143 contracts, so we're not going to hang out there. Palladium, a whopping 0 contracts, so we're not going to hang out there. So instead, let's head on out to the volume leader out there in the metals complex, which is gold, doing a decent clip this week, 105,000 contracts on the tape for gold, and about 31% of that coming in that SEP contract that has about 21 days to go. So it's a little bit refreshing. I know everyone likes to talk weeklies, and they're doing more paper and energy, and they certainly dominate the tape in in equities, but it's much easier from a vol and from a skew and everything else perspective, much more meaningful and relevant to analyze contracts that have a little bit more meat on the bones. The SEP contract has about 21 days to go, so we're going to hang out there. Coming into showtime, gold at about 1803. So again, well shy of that 2,000 level everyone was kind of paying attention to and celebrating not too long ago out there. Off, about 11 points or about 2/3% out here this week. In terms of vol, at about a 12.6, kind of unched from this time last week. Gold vol is, gold's never really been known for, extreme levels of vol outside of a few aberrant scenarios. And when it does have vol, it tends to be short-lived. So we're kind of seeing that right now, kind of just languishing, hanging out at the 1260 level here in gold. In terms of skew, last week, the puts 2.5% rich. This week, about 0.5% cheap. So a little bit of a swing in the puts. The calls last week, 0.75 point rich. This week, 3.5% rich. So get a little bit more bid to the calls this week. And in terms of where the action was out here of that over 100,000 contracts, what was the big dog? Looks like it was the 1,900 calls in September, doing about almost 4,000 here on the week. That was the big dog. All of that, well, not all of that, but a good chunk of it coming today, about 2,000 of that. So over half going up today. The rest kind of scattered throughout the week. So a lot of action on the 1,900s this week, which is kind of interesting. And we also have the 18 halves doing decent paper as well, about 3,000 contracts. The big day for them was actually Wednesday with about 1,250, a good chunk of that opening out there. So can't really say 18 half, 1,900 is trading today because there's not much paper today for the 18 halves. So interesting stuff afoot out here. Upside calls seem to be the order of the day in September. But if we're looking at gold, listeners, we got to go a little bit farther out as well, because that's usually where the intriguing and or head-scratching paper can be found. Looks like the 2,000 calls trading in decently active, 2,300 kind of scattered throughout the week. 2,500s if you want to get a little bit more optimistic, going up here in June of next year for small size, only about 500 contracts. So looks like whoever is out there slinging those funky flies and farther out of the money long-term calls in gold, taking a bit of a break this week. Mr. Rhodes, what's catching your eye and lighting up your tape out there in the land of the shiny stuff, sir?
That 2,000 line is just amazing to me. The fact that that many people are looking for a move above 2,000. While you were talking, I looked up the all-time high real quick, and it's 2063. So it is possible, but the call activity is really aggressive, and either people are worried about or speculating that we're going to see much higher gold prices by the end of this year.
That does seem to be the case.
I would be on board with that. We'll just leave it at that.
Oh, you're on board for a little bit of upside in gold. Let's see if you're also on board for a little bit of action in the ags.
It's time to get our hands dirty exploring the latest options trades and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, Mr. Rhodes, I'm going to throw you a curveball here, though. Are you ready? Because we do have KC wheat on our list, up 2.6%. We have wheat up 1.63%. And we have soybean oil off nearly 6.5% this week. But I'm not going to hang out there. We talked about wheat and the beans and the soybean oil in the past recently on the show, I'm going to throw you a curveball. I'm going to go out to the livestock, in particular lean hogs. What do you say to that, sir?
I'm all over the lean hogs. And bring back the pork bellies.
Bring back the pork bellies. Hashtag hog love all the way here on the show. Why am I going out there, listeners? Because it did 40,000 contracts this week. Lean hogs. You know, this used to be kind of a joke story. We had a couple thousand contracts. We'd laugh about it. We, of course, had our ongoing hashtag here on the show for hashtag hog love. But it's like some folks have some legit hog love this week because this thing's doing 40,000 contracts so far this week. So that is nothing to sneeze at. That's eclipsing silver right now, I'm sure, out here. So that gives you some frame of reference for how much action is going up out here right now in the lean hogs. Let's get at it. I'm sure you don't follow lean hogs, so I'll just walk you through it, listeners. We're at about a 109.5 right now in that front future. It's up about 3.15% on the week since Monday, and obviously up nearly 3% since our show last week. And of that 40-odd thousand contracts, about 41% going up in the AUG contract that is going out in 8 days. So we got us a weekly hog contract to parse. So I guess we can make an exception to our rules here, because you go beyond that, you're getting out into the October contract, and then it's weird. There's no SEP contract here. It's just the AUG, and then just skip over SEP completely and go right into October. Intriguing. I guess that's the cycle of the hog love here. So let's go out to the AUG contract, 41% of the paper. The vol, if you're wondering, what is the vol like in the hogs? This is a weird beast because, this is the weeklies. Take this vol number with a grain of salt. That front contract is about a little bit shy of a 12, 1165, off 8 points. But if you get beyond that, you get on out to the October contract that has 70 days to go. That vol is a 33.5. So a little bit more juice to be found out there in the longer term contracts than what we're seeing here in a weekly here, effectively. Yeah, and as Mr. Rhodes points out, it is a pretty backward contract. That front contract is at a 109.5. You go on out to the October contract, that's an 87 and an eighth. Dees is 81 pretty much. So there's a lot of juice in that front portion of the hog curve, a sentence I never thought I would say out loud, but that's where we find ourselves today. In terms of skew, oh my. I can barely parse this with a straight face, listeners. The puts on the AUG contract that have 8 days to go. This is why we don't go this near term, listeners. Those puts were nearly 90% rich to the at the money, 89.9% bid they are to that 11.65 vol level. So some folks want to get themselves some freaking puts here in the hogs. That was last week. They were 89.9%. This week, they are 10.6% rich. They've come in whopping 79 points from last week. That might be the craziest levels I've ever seen here on all the years we've been doing TWIFO. The calls last week, 24.4% cheap, so nobody wanted to touch the calls with a 10-foot pole. This week, 5.7% cheap, so they've come in nearly 20 points as well. So holy goodness, that is some skew. And in terms of the most active contract out here, I said we're at about nearly a 110 in that front hog contract. The 110 calls leading the dance out here this week with 3,374 contracts. Trading actively all week, 1,368. That was a big day on Tuesday. 700 on Monday. 738 so far today. So they continue to trade today. And 568 on Wednesday. Man, by the way, that's right behind that. We have the 108 puts with doing 1,100 contracts this week. The big day was yesterday, 518. Mr. Rhodes, I could go on about this for days. This is insanity. This is why the hogs are fun. What, if anything, do you have to say about this madness, sir?
Well, you had the 110 calls for the most active August contract, and then you go out to October, and the 58 puts are the most active contract.
Yeah.
Luckily, when you go out to February of next year, the 52 puts are the most actively. And I say luckily That means that we have a strike that is half of the call strike, that is more than half the call strike on the downside with the put strike.
Yeah, there's some backwards.
You see what I'm saying? I was looking for something under 55 so we could go, oh my God, look at that range. And February gave it to me.
My goodness, there's a lot of action, a lot of juice to be found here in the Hogs, listeners. So again, be careful treading in there unless you know what the hell's going on in the Hogs. But nonetheless, this thing is trading it up for size. As we keep on rolling, it's time to see what you folks have on your brain. Maybe it's Hogs. We'll find out as we head on into your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the Futures Options Feedback. This is your segment. You guys take the reins. And, I love our pro listeners, Mr. Rhodes, because they are just a very savvy bunch. We have a Mr. Unlimited in the chat saying, the reason the Hogs are so backwards, sir, is because the McRib is coming back. I love that. That could very well be true for all we know. I know that's kind of a joke, but the McRib has been known to move markets in the past. So perhaps this is a sign. Perhaps this is a sign that McRib is making an impending comeback, which if that's the case, Mr. Rhodes, get me too. I like myself a little McRib. Are you a McRib fan?
Oh, yeah, absolutely.
If you don't like a McRib, what are you doing? What's wrong with you?
I'm looking for the closest McDonald's to me right now.
Yeah, I kind of want a McRib now too. So our chat contributing to my overall health. So thank you. Let's go on this one. Actually, I kind of cheated for this one, Mr. Rhodes. This question came in, one of our pro listeners, Dan T, on our pro Q&A yesterday for Mr. Nick, who's a developer of QuickStrike. But they also asked about VIX, and that, Nick's not a VIX trader. So I thought I would save this one for you, Mr. Rhodes. Dan T said he wanted to ask a couple of questions around futures options for hedging. I've been setting up some bear call spreads using NQ and ES, so obviously the NASDAQ and the S&P 500 listeners, to hedge my account. I usually wait for a bearish day candle to form and one of the indexes to fall somewhere around my support levels. I currently do not use VIX futures, but I'm curious if you use the VIX 9-day, VIX N, or VIX F in constructing positions as well. If so, what days times would you build positions? And do you use technicals in constructing positions as well as a percentage of a portfolio that you would recommend to a hedge? Thanks for all your help and have a great day. So a lot of questions packed in there, Mr. Rose. I know you like to sling a little bit of VIX futures out there. I've always been leery about calling VIX a hedge, so allocating a portion of your portfolio to that as a hedge. I call it more of like a kicker. But that said, if you have any thoughts, if you use technicals for your VIX futures, have at it. And then B, if you have any thoughts about his bearish call spreads for NASDAQ or ES. And then also, thirdly, what percentage of his portfolio should he allocate to this kind of stuff, sir?
Okay, starting with that first question, I kind of use technicals with respect to VIX. What I look at is, I guess you can think of the VIX future spread relative to spot VIX as being some sort of technical analysis. And I tend to try to take short volatility positions when I think the spread is too wide and I have the opportunity to take advantage with puts, something that I think I've spoken about ad nauseum and have bored people to death with. But that's how I approach VIX futures trading, is actually with the options, because you can define, we were talking about tread lightly in the hog space. Well, tread very lightly in the VIX space. It can move on you very quickly. in both directions sometimes. So that's what I do with respect to VIX. I do use VIX and VolQ and RVX, those three volatility indexes, to help me choose the strikes on some of the trades that I will do. So that's how and then I might, if I see something that's in an uptrend or a downtrend, and this is for any of the three indexes that I just mentioned, that will come into play with respect to where I might set my short strike, like a nice 20-day moving average for a 2 or 3 day trade, selling a bullish vertical spread in that case. That tends to be, I combine that with what the corresponding volatility index is telling me about the market's prediction of a price move over the next few days to choose my strike prices. And then I did like one of the things that Dan said in here, where he's using candlestick patterns to kind of combine with option trades. That didn't make a whole lot of sense about 10 or 11 years ago when my first book, Candlestick Charting for Dummies, came out. But now that we have really short-dated options, and like in the equity space, we've got expirations every Monday, Wednesday, and Friday. It makes a lot more sense to incorporate short-term technical analysis into option trades. Maybe not when you had to hold on to them for a couple of weeks for them to work out, but I really like, when I saw the bearish candle part of this comment, I was like, I definitely wanted to compliment Dan on that approach. I think I got, did I miss a question there? You threw three of them at me, and I feel like I missed one.
I think, percentage to allocate to this as your portfolio.
Oh, goodness gracious. About 10 or 20%. But I'm looking at short ball, not hedging. I don't really use VIX for hedging.
Yeah, I kind of bristle at that connotation as well. But interesting stuff. Good questions there. Our pros are savvy. I like our pro. And you're right. The advent of the weeklies does make some of those technicals line up a lot better than I used to try to use technicals for gamma scalping a lot on the trading floor of the C-ball. They never really lined up well because you had contracts that were longer dated and everything else. And weeklies now has really changed that game quite a bit. We've got, so let's go here really quickly to Whisper ONG. You talk about Nat Gas. We were talking about Nat Gas. So he says, there's a Nat Gas play no one knows about. It's GULTU, ticker symbol GULTU, GULTU. He says MGY and FCX, so Magnolia Oil and Gas and Freeport McMoran, they both own 31 million shares of this thing. This GULTU, I never heard of it, Mr. Rhodes, but it's Gulf Coast Ultra Deep Royalty Trust, trading a whopping 2.5 cents today. So there you go. Looks like it's kind of like the Doge of Nat Gas. What do you think of this one, sir?
I just went out and bought 10,000 shares.
Well, there you go. I guess Whisper ONG, that. He sold.
But yeah, what did 2.6 cents times 10,000 shares come to? My McRib cost, or maybe I can make enough to go buy myself a McRib later on. I don't. I would need to dig more into this. My assumption is that if we get high enough energy prices that it improves the economics of drilling in the Gulf. Sometimes you're drilling in the Gulf and you're doing so at a loss. So, I would assume that they benefit from maybe energy prices going up, but their whole market cap is only $5.6 million. It seems to me those two companies that were mentioned could just buy the whole thing.
Yeah, they easily could. So I'm always leery. People sending out this thing. Who knows if it's a pump and dump or what the hell it is, but yeah, you can $25 for a nice 1,000 lot, Mr. Rhodes. So go to $250 if you really want to go crazy for your size 10,000 lot. But there you go, listeners. People are always asking different ways to play these things. Maybe one of these shady trusts is the way to go. You know what's not shady, though, is our listeners. We got Frank1209 in the chat saying, great show, guys. Thanks. No, thank you, Frank, and everybody else who's listening live. Of course, all you listen after the fact. We love you all as well. All right, listeners, that music means my voice can rest, at least for the rest of today. But don't worry, we're back again tomorrow, hot and heavy, noon Central, 1 p.m. Eastern, going to dive deep into the world of volatility on Vol Views. And for all of you on the pro side, like Frank and everybody else, you get to join us at Options Oddities, 2 p.m. Central, 3 p.m. Eastern, where we break down the mad week that's been in the world of unusual activities. So look forward to that. Been some fun ones. How are our crazy EDU puts holding up? I guess we'll find out tomorrow on the show. But before we go, let's go back around the horn. Let's go to Mr. Rhodes. Mr. Rhodes, sir, if folks are intrigued, want to check out any of your research in the world of volatility or anything else, where should they go? What should they do?
The EQ Derivatives website. Anything that I write actually goes in front of the paywall, so you can find things there. Anytime I write something, I put it out on Twitter, and you can link directly to what I put out from Twitter. I've been on a 2-week hiatus of making videos, but videos will start coming out again next week.
There you go. Check him out. And while you're at it, give him a follow on ye old Twitter. He's just at Russell Rhoads, 2 S's, 2 L's, and then Rhoads. He's got to spell it the funky way. RHOADS is where you can find him on the old Twitters. You know where to go to find all of the reports we talk about here on the show, cmegroup.com/TWIFO. You can check them out all week long, 24/7, completely for free. That's how much we love you folks out there. Send some love over there, Mr. Nick, who's on our pro chat this week as well. He created all this stuff for you guys at the end of the day. So if you like these markets, if you're even mildly interested in what's going on out here and how that impacts maybe some of your core holdings and equities, because they do, it's worth checking out. You can't beat the cost. Completely free. cmegroup.com/TWIFO or /TWIO are the places to go. And of course, if you want to learn more about upside calls, who's trading these small delta calls in small caps, or how is COVID and the rise of delta and everything else, how all that is impacting small cap or small caps versus large caps from a vol and a volume, everything else perspective, you know where to go. It's FTSERussell.com. FTSE Russell.com is the place to go. Give them a follow on the old Twitters while you're at it as well. At FTSE Russell is the place to go to learn more about that. Speaking of going, I'm going to get the heck out of here so I can go rest my voice. Back again tomorrow, noon Central for Vol Views, and we're back again next Thursday, another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.